Good morning, fellow traders from each and every part that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one financial broker in Kenya and beyond. Now, this is going to be a pre-recorded YouTube video to mean that you could visit the HFM YouTube channel at HFM Kenya. Like, subscribe, and click on the notification button so that you're not left behind on very important and informative education that we post from time to time to help you navigate the financial markets. Now, I will literally give a 3 seconds moment of silence like it has been our culture and routine so as to make sure no one is left behind. Very nice. Now, with that out of the way, we'll jump straight right in to see the happenings and unveiling of the financial markets and see what's on the menu. Allow me to share my screen. Very nice. Not so much high economic data coming in today. Majorly two. Business confidence from Australia, Sydney, Australia, which came out negative at -3, with the previous at 5 and the consensus or anticipated at 4, weakening the Australian dollar. And also the Reserve Bank of Australia interest rates decision, which has been held at 4.35%, to suggest a wait to see much more performance of the Australian economy. Very nice. But however, as we move into tomorrow, which is the 11th day of this month of December 2024, we see that CPI, or Consumer Price Index, which can be categorized as a major inflation indicator in the United States, will be printed tomorrow during New York session. Let me go right there to see it. Consumer Price Index, with the previous being at 3.3%, and the consensus also anticipated to be at 3.3% year on year. We shall wait and see what's that all about. And inflation rate year on year also being anticipated to be at 2.7%, with the previous as 2.6. If it comes out higher, it strengthens the dollar. If it comes out lower, weakens the dollar, in reference to consensus and previous read interchangeably. We also have the Bank of Canada interest rate decision. So we see quite a number of banks printing interest rates decision, and kind of like to call it the central bank interest rate chess play, as they try to adjust the economy to fit favorable inflationary numbers and also ensure a good employable environment. With that out of the way, we see a special case in gold, which is attributed to the People's Bank of China, which revealed it purchased 60,000 fine troy ounces of gold last month, and which is its first buy since April. So of course this will tend to have a bullish momentum on gold. This is a shift after 18 months spree ease, where we see the People's Bank of China are seemingly not interested as such to get into purchasing oil, gold with the volumes that it did. We shall see if history will going to repeat itself moving into the future. So let's share the gold, the charts. Very nice. So on the menu today, we begin with gold, and we see that gold from a daily time frame yesterday closed with a bullish candle, and we see we are still printing bullish. If I go to lower time frame to see what is happening, we see major highs being taken out. They're about at 2667.04, suggesting that we might see a price printing even much more higher. This could also be seen as a key level. Let's go to the lower time frame to see it much more clearly. 4 hours being seen much more clearly. Would want to see now price printing to the 2681 to suggest the now bullish momentum that is attributed to the People's Republic of the People's Bank of China, revealing that it is much more interested in buying this precious metal. Now, this would tend to increase the value of gold, and trading gold as a contract for difference, we would anticipate it to print much more higher and possibly take out the key level at 2681. And if this continues, among a bunch of other factors, where we see the Middle East Syrian state in turmoil, we would like to see gold print and possibly even take out the 2715.99 high. We'll keep monitoring this as we move. So for gold, buys are much more likely. For GBP JPY, we see that we are printing price to the upside. I think we talked about this yesterday. We want to see more highs being taken out to support this narrative. And we see a good retracement, which is happening as we speak at the time of this recording, where we see GJ being positive or bullish 0.08% at the time of this recording. Would want to see the highs being taken out supporting that narrative. For USD card, which has been amongst the most interesting currencies in the asset class of currencies to look at in the recent past, we see it has taken out the high that we spoke about recently, which is at 1.41779. We want to see a candle close above it to confirm much more bias to the upside. For USD JPY, we see the high that we spoke about yesterday has been closed above. We want to see much more highs being taken out. Perhaps we go to a lower time frame to see the possibilities of that. At the time of this recording, the USD JPY is bullish 0.02%. To support that narrative, we want to see highs being taken out and lows maintaining, suggesting price movement to the upside. For USD, this is USD card again, apologies, USD Swiss franc from the daily time frame. From the retest of the key level that we did early last week, we see that price is printing much more to the lower side. We go to a lower time frame to see what is happening. So we see much more of a consolidation where prices is making equal highs and equal lows, to suggest that we would want to see price breaking out from this consolidation by either taking out this low to continue the bias to the downside, or taking out this high right here at 0.8025 to confirm more bias to the upside. For much more aggressive traders would consider getting in for buys after this recent high has been taken out. Consider this a quite high risk trade, but would want to see it break out of this particular consolidation that is happening on the 1 hour. On the 4 hour, we see nothing much more clear. Price is hanging around the recent high and the recent low. By market structure principles, we want to see one of these being taken out from a higher time frame, at least, for us to go to lower time frames and get in for entries at favorable risk to reward ratios. For USD Australian dollar, where we just have seen data which came out early this morning suggesting a weakening Australian dollar, which supports the narrative of the bearish price movement from the 4 hours time frame. We see a retest of the 0.64646 resistance, which was not broken. Now price is printing to the lower side. If you go to a lower time frame, we want to see the lows being taken out to confirm our bias to keep being bearish on this particular asset. Possibly we see a key level at the 0.63783. We want to see this being taken out to confirm the bias to the downside, marrying fundamental analysis with technical analysis for risk management, entries and exits. Very nice. For GBP USD, we see that price gave us a fake out. I think we have mentioned that quite a number of times this week, and price closed above the key level right here, retesting it and printing price to the upside. We mentioned yesterday we want to see highs being taken out to support this narrative, but that is not what is happening. We are clearly in a ranging market also, suggesting that fundamental analysis from both of these countries not providing enough impetus to give us much more market direction. However, the new change of character from a bearish to a bullish trend should be significant enough for us to look forward for highs being taken out to give us much more confidence to get in for trades in that context. For Euro USD, we begin from the daily time frame. We see also we are in some sense of consolidation, and yesterday almost closing with a doji. The candlestick language on the daily chart for yesterday's candle is not printing much more information as needed. So we want to see either the high being taken out, is it 1.05911, or the low being taken out for risk embracing traders, although for safer trades the low has been taken out at 1.05328. All this is in confluence with updating fundamental analysis or economic data, which gives us much more market direction, and that is as we anticipate tomorrow's consumer price index, which is a key indicator of inflation, to give us a much more market direction needed for these last weeks of this great year 2024. as we're walking into 2025 to see the opportunities, much more opportunities that are going to be there, having in mind the United States has a new president right now, which we are going to be seeing a shift in both domestic and foreign policy, which is going to affect the rest of the global economic trends, which is going to inform much more buyers, and we expect much volatility into the coming years. Into the coming year 2025, to mean that more opportunity for us investors and retail traders. As a disclaimer, by any chance, this is not financial advice. This is purely made for informative purposes. Kindly do your due diligence and observe risk management as you get into the trades. And until tomorrow, see you the same place, the same time, to keep unveiling price as new economic data is printed. God bless.